So Marc, one of the current themes with this new administration is, cutting government wasteful spending, cutting loss, cutting programs that are deemed to be, operating without a real reason. And, they're taking up a lot of government money and employees and such. And, for us in the housing world, me being a real estate agent and you being a loan officer, one that is kind of interesting that we decided to chat on today is the CFPB, the Consumer Finance Protection Bureau.
Right.
There's some talk about the Trump administration getting rid of that. So I think the conversation should kind of lead around, what is the CFPB? What does it do? What would it look like in a post-CFPB world? And then is it likely for that to happen? So, do you mind giving some color? What exactly is the CFPB and how does it operate?
I know it's hard to believe there would be a government entity that was wasting money.
Right.
In the first place. I mean, it's unheard of, right?
Right.
But the CFPB came along to regulate a lot of these industries that were kind of taking advantage of people, back in the day. And so I lived through this in the mortgage world, where when I was a young loan officer, I worked for a broker. We refer to it as morally bankrupt. That he maybe made some decisions that I would not have made for sure. And so, his goal was to make as much money as possible. So a lot of times, somebody would be told, hey, your rate's going to be 6.5%. It's going to be a fixed rate loan. It's not going to change. And then they would get to closing and it was 8.5%. And it was on an adjustable rate mortgage. It was only fixed for the first 2 years, and there was a prepayment penalty for 3 years. So, and the theme was sell it at the table. Just sell it at the table. You can
like
make
the
that
closing
happen.
table. Like get to the closing table and convince them that what they thought they got is actually nothing in line with what they're actually getting.
Yeah, these poor people showed up at the title company. They've moved out of their old house. They're moving trucks in the parking lot of the title company they're signing their papers at. What do they do? You don't have any choice. They didn't have any warning that any of that was coming. It was totally wrong, and just there were fees that didn't make any sense. I did see somebody put on a settlement statement, a PITA fee, a pain in the, you get it, just because the customer was difficult, and so he just threw that fee on there, and back then you could do things like that.
Yeah.
And the CFPB came along to kind of put a stop to that. They regulate things like payday loans and mortgages and car loans and bank loans and, even pawn shops, where they're lending money. We want to protect the consumer. And the consumer needed protecting back then for sure.
Nobody was guarding the hen house.
Nobody was guarding the hen house.
And it seems like maybe now if you were to do away with the CFPB, the hen house would be ripe for the proverbial wolf, as they say.
Something like that.
Yeah, and it's interesting to me because, I got into this industry post 2011 when a lot of this stuff went into effect. Dodd-Frank went into effect in 2010, which has more to do with, the way that you're compensated as a loan officer than it does me as a real estate agent. So I'm just used to operating in a world where we have to be transparent. A lot of people are aware as well of what happened with NAR and the National Association of Realtors settlement, where we have to disclose buyer's agent compensation and actually get a document signed before I can even open the door on the first house to show you.
Yeah.
And you're like, welcome to the club, buddy. We've been 2011, 2010, right. We've been having to do this. And, so regulation is not always a bad thing, but I think in general, over-regulation is. What do you think would happen if the CFPB went away? Do you think it would be a good thing? And I guess my question is there any middle ground where you can cut some of the stuff that's, wasteful and causing extra time, fees, and energy, and keep some of the things that are protecting people from getting to the closing table and realizing that, hey, by the way, your rate is not fixed, it's adjustable, and it's 2 points higher than we told you it was.
Well, and we have to kind of talk a little bit about what the CFPB did that was good. So it was created, with basically no oversight. Nobody can say, yep, you don't have, the president can't just say, you're shutting down. Now he can dry up their funding, which he has, but they did some good things. They put into place the TILA, RESPA, integrated disclosures, so or TRED for short. So that's Truth in Lending, Real Estate Settlement Procedures Act, integrated disclosures. And basically the idea here is that, when we get a contract from a buyer or they're refinancing and we start their loan, the lender has to send out this loan estimate that shows, is it fixed? Is the rate fixed? Is there a prepayment penalty? Is the interest rate locked? And if so, when does that expire? If it's not locked, what are we disclosing here? It has to be realistic.
Right.
And then once we do that, our lender fees cannot change.
Yeah.
And so we're committing to the buyer, this is what we're charging, and that's it. And then now there's some sections like, title fees and appraisals and surveys and things like that it has a tolerance of about 10%. It's 10%.
Yeah.
If it's more than 10% different when we get to closing, then the lender has to pay the difference.
Okay.
And so now there is an opportunity, there's some areas here where appraisers don't really want to go. It's really far away, 2 hours away to get to Crystal Beach, for example.
Right.
If you're from South Texas, finding an appraiser to go out there sometimes costs more money. And so if that happens, we do have the opportunity to send a change of circumstance and say, hey, Mr. Buyer, this appraiser charged more to go to this property because it was 2 hours away. It makes sense, And so we just redisclose that. We send them a new loan estimate so that they know what the change is. And so that way they're not getting to closing and finding, oh my gosh, my appraisal was $1,000, not $500.
Right.
And that's the intent of that. And then there's things like taxes or insurance. And I've had customers before, we've kind of gotten into a practice of helping them get a quote, from the front end when they first go under contract. So they have some idea of what the insurance is going to cost. Now, if they go with them, great. If they don't, okay. But, I've had people that went with a more expensive policy.
Yeah.
They've insured with Bob Jones or whoever it was, the agent, forever.
Yeah.
And their kids are gonna, and their grandparents did, and that's just the way it is. Doesn't matter if it's $1,000 more a year. Well, that wasn't our decision. So we're not held to a tolerance level for that.
Right, sure.
The taxes are what they are. We're not the tax office. We do a very good job of making sure we get as close as possible. I think.
Yeah.
At least our folks do. Others, not always, but it is what it is.
Yeah.
But that's what they were created to kind of regulate, so that all those things were regulated and you couldn't change them and just shock the customer.
Yeah, and that seems like a reasonable thing, a 10% buffer. So basically, if an appraisal is going to cost $500, it can come back as high as $550, essentially, to make an easy example, and you wouldn't have to disclose or redo an entire, change of circumstance agreement and letting them know that everything has changed in that particular circumstance.
Right.
So what, I guess it seems to me like it's a good thing to have in general. You don't want people getting, taken advantage of by predatory loans. Right. As you said, it's not just the home mortgage industry. It's getting car loans, it's credit cards, it's payday lenders, it's title pawn companies and stuff like that. They have much higher, much more outrageous interest rates than we do in the real estate world, if you can believe that. Even though some people think mortgage rates are outrageous, just try to go to a payday lender and see what you end up paying there. What would really it take to get rid of this? I know it was passed by Congress, correct? So it would probably take Congress to reverse this.
Exactly. And some of this stuff is regulated by other agencies anyway.
Yeah.
There's the Federal Trade Commission, there's there's all kinds of agencies that regulate what we do as lenders. It's
Right.
not just the CFPB. And so what the CFPB did is in 2015, they put together these forms. Here's what you got to give them. And then when they get close to closing, 3 days before closing, you got to give them a form that looks very similar. That's their closing disclosure. They regulated all of that and standardized it.
Yeah.
It was a good idea.
Yeah.
If the CFPB closed tomorrow, do you think all those lenders want to change it? They went through a whole process. I worked for a bank at the time.
Yeah.
And we had to change literally top to bottom the way we did things because of this form, because of these forms and these regulations that the CFPB put in place. They were good. So first of all, yes, it would take an act of Congress, quite literally, to get rid of the CFPB.
Yeah.
Number two, we as an industry, there's trigger leads. We were talking about this earlier.
Yeah.
So if I pull a hard inquiry on somebody's credit report, before I hang up the phone with them, they're going to start getting phone calls from 100 different lenders. They're going to offer their firstborn child or whatever, so that you'll go with them instead of me, and we've tried to put a stop to that as an industry 4 or 5 times. We can't even get that passed. How are we going to get rid of the CFPB passed? It just doesn't make sense.
And guys, just before we finish up this conversation, we noticed that the majority of you that are watching these videos aren't subscribed to the channel.
Yeah, what's up with that?
Guys, if you're getting value out of these videos and you're enjoying our content, a subscribe to the channel helps us out tremendously, and it allows you to see our videos when we drop them. Now let's get back to the conversation.
Thank you.
Yeah, and I've had a few clients that once that hard credit inquiry was pulled, they started getting phone calls and text messages and video text messages of a loan officer they've never seen before talking to them on camera. And it's really off-putting for a lot of people. And they're like, hey man, can you make these people stop? And I'm like, no, I can't. I wish I could. But yeah, that would probably be something that would be worth getting rid of. But as you said, if you can't even get rid of that, how are you going to get rid of the CFPB? But Trump too, I believe he appointed somebody the head of CFPB. Right. So, if we're talking about getting rid of certain, branches or organizations that have been set up like the CFPB, you probably wouldn't appoint somebody new to run it. You would just be looking at getting rid of it, right? Right.
You would just try to shut it down. And, and if we look at the industry, first of all, there's other agencies, even at the state level, the federal level, that are regulating this stuff anyway. So even if they didn't exist, a lot of it would still be in force. So, now Trump did appoint a new director to the CFPB, and he's not a get rid of everything guy either. That's one of the things that's surprising.
Yeah.
And is that, it would appear, and he made another appointment to the staff today, it would appear that he intends to keep the CFPB, just maybe not in the form that it was before.
Yeah.
Maybe not as, maybe if it was considered overreaching or whatever the term is, these agencies, he's going in and kind of slimming down. He's not getting rid of them,
right.
And that's, and if you think about it, even if he did, if I'm a bank, if I'm, I don't know, Wells Fargo, or I'm Mr. Cooper, or one of these loan servicing companies, and I'm buying mortgages, all of a sudden the CFPB goes away, and it's the Wild West, let's say. Let's say all these state agencies didn't exist and whatever. What do you think the next administration is going to do?
They're probably going to put the CFPB right back.
They're going to put it all right back together, and then me, as Mr. Loan Servicer, who bought that loan 3 years ago, I'm stuck with a loan that's breaking the law.
Yeah.
I don't want that.
Right, sure. That's a great point.
If it was, totally predatory lending and it was taking advantage of people, I don't want that loan. And there's people there's people like us, you and I would never do those kind of things to people. It's just wrong.
Yeah.
I always tell people, I'm the local guy. You can always find me. I don't want to see you at HEB after closing and have you throwing cans at me.
Yep.
I've got to do a good job, right?
Yeah.
And did a loan for my neighbor. Hey, if you don't like it, come egg my house. It's more expensive these days to egg houses, but it's still
people
not.
are thinking twice about egging houses these days.
Maybe we only need 2 or 3 eggs.
Yeah.
But get my point across. The point is for me, it boggles my mind that people still try to do that and take advantage of folks. But I don't think the CFPB is really going anywhere. And even if they could get it passed, I think the industry is at a point now where it's so regulated by so many different agencies that I don't want to say it's not going to make a difference, but it's not going to make the difference that everyone's afraid of.
Yeah. And I think when you look at the totem pole of government waste and things that are overregulated and stuff like that, I think the CFPB is probably at the bottom of that list. You can do a lot of cuts and save a lot of money, and Trump and Elon are now talking about sending everybody $5,000 from all the savings. So I think a lot of people are up for that. Yeah, I'll take an extra $5,000.
Sure.
That was used on government waste. So, but I don't put the CFPB in the category of wasteful spending, because I think that at the end of the day, it isn't right to the consumer to be there, as you said, at the title company, ready to sign over to buy their home, and they find out the deal that they had is not the deal that they were originally sold. And a lot of times people are very rate sensitive. Home prices right now are higher than they've ever been. Mortgage rates are not higher than they've ever been, but monthly payments compared to average annual income is kind of, at an all-time high right now. Right. So if you budget and you budget at the top end of your debt to income ratio and what you're able to afford, and then you find out that the lender actually pushed you way over budget, then you could see foreclosures and real issues for people coming down the pipe. So I think for those reasons, the CFPB is kind of a good thing. Probably will stay around. I'm all for cutting things that don't make sense, but this one seems to make sense to me.
Yeah, I mean, it makes sense to me, and I'm a lender.
Yep.
I gotta follow the rules, right? So,
right.
So yeah, I mean, I think I think it was really a good thing. I do think maybe it got to a point where there was some waste going on.
Yeah.
And they also kind of played in their own field. They would make their own rules, and they would do some, But I think this change of leadership there has solved a lot of that.
Totally agree.
So what needed to be changed, I think, is being changed, and they'll motor on down the road.